Okay.
Morning, Scott.
Hey, Anton, how you doing?
Hey, can you see my screen, the market monitor? Does that
Yeah.
come up? Okay.
Yeah, I got it.
I'm just gonna wait a few minutes for more people to join, so just hang out.
Yeah, I told my whole team to get on, man. They
Cool.
need to be. We'll see if anybody gets on and joins, but let's see what's going on in this market, man. I got some just things I can't really explain right now.
There's a lot of things that yeah,
I mean,
I get
it's,
it.
it's going well. The things are, I mean,
What do you mean, Myron?
selling. It's just there's some weird ones that I can't figure out. Like every stat shows me they're priced well, but there's not good
Yep.
activity. You know, there's some of
No,
those.
I have a couple that I'm like in the 30 range of showings and not an offer, and it just boggles my mind.
I mean, new construction is competing in a lot of areas.
Yeah.
It's definitely hurting us when they're buying down the rates and offering crazy incentives.
Yep. But they're clearing a lot of their inventory, so
I just closed a nice DR Horton for 5%. Man, I got in that red. They had like the red tag sale,
Yep.
and we got them 120 grand off list price. Went
Yep.
from 850 down to 730 or 750 from 860, something like that. Over 100 grand off list price.
Moore's Landing.
Moore's Landing. Yeah.
Yeah, there was one in there. I looked at the original list price and it was 950,
Yeah.
and my buyers decided not to purchase, but we negotiated them to 738 up to 950.
Yeah, they're all sold out now too.
Yep, they're sold. So I mean, they're clearing their inventory out. So
yeah, that's good.
It's a momentary, kind of competition for resales that are tough.
Yeah, that's true. I mean, 5% was nice.
Yeah, agreed.
50, man. I was like, dang, I'll take it. I didn't even know that was going on. And he told me that. I was like, nice little bonus. After showing them houses for 2 years, it kind of paid off. I was like, man,
that's the problem. You don't know which ones are going to pay off, so you got to do them all.
Yeah. Yeah.
So, all right. Well, it's noon, and there's enough people on here, so I'm sure more people will join us. But happy rainy Friday, everybody. Hope everybody's still getting showings and selling houses. So here we go. And we did a little bit different last time, but I'm back on Market Monitor again. So just wanted to go through some things that are happening on here. So here's median price, all areas. So we're up 7% year over year. Now keep in mind that's when they do these stats, it's looking from January of last year. So January of last year, you can see where we're at 360, 295 up to 385. So, but look at what happened last year. We went January to February to March to April to May. So that's a pretty significant rise from here to here, right? So February we're at 375. I mean, I think we're still going to be above 375 in February. March 385. I think we'll be above 385. I'm not going to say for sure, but I think once you get into May and June, we are not going to meet those numbers. So this is what I've been telling everybody for a little while. Watch out for the media. And some of the media is already backtracking on their statements, but watch out for the media when these May numbers come out for 2023. There's no way in my mind we're going to be 425 or higher. I just don't see how the market is going to support that price at the rates and everything that's happening. So these 2 months, I think, are a big risk that the media is going to come out and say, oh, look, Charleston's down 7% year over year on price, and the national average is down 6% on price. So I think the year over year numbers in May and June, I believe they're going to go negative, because you can see we're still drifting down. I mean, February might still be in this range, but I don't think we're going to jump up to 425 by April, May. So all that being said, it's going to be a period, like it's this window here that I think we're going to have to fight the media a little bit. And this is, just get ready for your scripts with buyers and sellers, is that when the numbers start to turn negative, people are going to be looking at you and asking questions. So but I do believe once we get past this window of time and start doing year over year comparisons, eventually it'll come back to zero and start turning positive again. So I do believe this is kind of a momentary time period that we're going to go through. And we couldn't, this was a massive run up that I just don't think we're going to replicate that this year. I'm not worried about the bottom falling off, but I also think we're going to go negative in this range here. Price per square foot. So again, I think people pay a little bit less attention, but you can still see how flat price per square foot has been over the past year almost. So, with the downward in February and January, but, also keep in mind the seasonality, we're usually lower on sales price in a January time period. Again, if we go back to 2019, or here's 2018, 258, and by May we're hitting 274. In 2019, we're at 266. By June, we're hitting 290. So having a low January, February time period is not abnormal. It's just, I don't think we're going to peak back up to these numbers necessarily this year. So price per square foot, percent of original list price. So here we go. So this is still dropping off the cliff here. So, August, we were 100% median, and then we have just been falling. So we're at 96.5 for January. Now, also keep in mind, the January numbers or contracts were written Thanksgiving, Christmas, New Year. So what we need to remember is that, these could have been houses that were priced in August, September, and have been following the market down, trying to hit the right price. And Scott, we talked on this earlier, is like your DR Horton one is one, right? If it was originally listed at 850 and they're taking 7 something, well, that's reflecting in this number here. So the builders clearing out a lot of their inventory and making sales. So it's really kind of running this number down. But does it look like this number has bottomed? I mean, it's pretty straight down, right? So expect some more negotiation that be happening. And a lot of this is also as the new listings come on in this year, where people are more astute of what's happening in the market, hopefully not overpricing, this number will settle down and start to come back up. But you can see we've fallen below 96.5%. We've fallen below where we were back in 2018 and 19, right? So we've actually fallen below that. And if you look back in time, you can see how dramatic that drop off is, and we are as low as we've been since 2014. But a big factor of this is people in the fall kind of going higher on their list prices instead of either even or lower, and it's driving this number down. So we just got to watch. And I think this will, with contracts coming in now, and as we go to the spring, I think this will level out and find a place again, in the 2014 to 19 range. I think we're going to go back to this range here. Is somebody singing on the Zoom?
What you are above the world so
That's so nice.
high,
Good background
like
music.
a diamond in the sky. Twinkle, twinkle,
So here we are on the days on the market. So percent of original list price, days on market. So we've jumped, and I'll zoom in again here. So I jumped up to, here's the last 3 years, right? So median days on market were at 23. So again, median means half the houses are taking longer than 23 days and half are selling faster than 23 days. Well, 23 feels significantly different than 3, right? So, we're selling in a weekend. Now we're selling within the month. And again, set up your sellers for the expectation is that the median is going higher, and you don't sell a house necessarily in a weekend. So don't, your seller might be remembering back to these days, but they need to understand where we're at right now. And the average days in the market is up to 41. So we're getting back to that time period where it's going to take a month or 2 to sell a house. It's not going to necessarily happen that weekend. And again, this is the same thing. Does this look like this is peaked out? I mean, in my opinion, no. I mean, the spring will help settle this down, but we're still going higher on days on market. So make sure your listing agreements are for long enough in time, and make sure your seller's expectations are, it's not going to happen overnight. You can make it happen overnight at a low enough price, but that's not the typical pattern right now. Months of supply. So this is interesting here. So months of supply, and I know I always say this, but this is the one number that's most important to me to know how the market's doing. And it's very interesting because we have been falling since November, December, January. And I believe, depending on the closings for February or March, I think this could still be headed lower. And,
What?
1.6
I
months.
am. I'm listening.
1.6 months of inventory is extremely low. And, again, if we go back in time, if we go back to the max time, so 1.6 months, look at where we were pre-recession, we were at 3 months. So 1.6 months is twice as fast. So the market is moving twice as fast as pre-recession. And also for a reference point, we're at 17 months of inventory. So in the recession, 17 months of inventory versus 1.6, right? So we were 10 times slower than we were here. So anybody who says there's a real estate bubble, they either didn't live through this, because a lot of us on this call did, and it did not feel at all like it does today. And the numbers reflect that. You can't have 1.6 months of inventory and have a real estate bubble. Yeah, some people maybe overpaid a little bit in the spring of 2022. There were some just, the market got so crazy that maybe there was a few people that overpaid, but at 1.6 months of inventory and what appears to be going lower, there's no way we're in this high risk real estate bubble right now. Homes for sale. So, and again, let's go back to months of supply. So months of supply, if you're at 2 months of supply, every other house will sell that month. That's the number. So 1 out of 2 will sell. We're almost getting to, are we going to go back to 1 month of inventory? I mean, maybe depending on which way this inventory goes, maybe, but that is, again, this market has been faster than anything else that I've experienced, and it continues to be extremely low. Homes for sale. So what have we noticed? The pattern is actually a downward pattern again. I think this morning we're at 2555, I think I wrote on my calendar. So since we peaked out in around September, October, I'm just looking at the calendar again. And we've just been going down since. So today's 2555 is actually the lowest number of active listings since July 21st of last year. So just for perspective, we typically, and let's go back. So, and maybe I went back a little too far. Let's go back 5 years. So if you look at 2018, we started at 5391. Which way do we go on inventory? We go up, right? Into the summer, and then the winter for the holidays, it falls off. And then 2019. So here's December of 2018, we're at 5,800. What do? We go up in the new year, and then we drift off for the rest of the year. So if you go back in time, forgetting the COVID years, look at the low. The low is in the winter. Sometimes it'll be December, sometimes it'll be January. But the low is in the winter, and it goes up, and it goes up, and it goes up. That's the seasonality, right? What are we experiencing right now? We are the lower listing count. We started the year, I think the highest number I had in January was 2766. So we've gone from 2766 to 2555. So we are going down in January on inventory, whereas the seasonality is telling me we should be going up. So if you're going opposite of seasonality, that just means the market is overriding the seasonality. So the buyer demand right now is overriding the seller motivation to list their house. And that's why the inventory is dropping off again. And, again, for perspective, if we have 2,500 and change for sale, here's our normal market, right? We need 6,000 listings. We have 2,500. We need 6,000 to be a normal market. So we are still way undersupplied. And if we go back in time, so again, for those of us who were in the business back here, we had 12,000 houses for sale in the recession. So 12,000 houses for sale versus 2,500. Where's the bubble, right? It's not like it's spring of 2022, but you can't have a bubble with 15 years later, you have 2,500 versus 12,000 with 50% more people living here, right? So think about it, from here to here, we have 50% more people in Charleston, and we have, 20% of the houses for sale. So again, the numbers are reflecting that we are not in this high risk bubble that maybe some articles are showing. So it's up to you to share some of these with your clients, some of these actual numbers from our MLS data, and explain to them where the market is at. Closed sales. So here's the closed sales. So 37.3% off January of 2023 compared to January of 2022. So January 2022, we closed 1,425. That's a massive drop in a year. But keep in mind, this drop, it started the second half of last year. Look at us falling off the cliff the second half of last year. But you're going to see this pop up. Maybe not February. February's generally, it's only 28 days. It's usually not the best month, because those are still kind of Thanksgiving, Christmas, New Year contracts to some degree. But I know that it's going to pop, because look at how many contracts were written in January. And you'll see this on the pending sales. So as those pending sales start to show up, this will return. Are we going to sell 2,500 a month in 1 month in 2023? I don't think so. We're not going to be at this level, but we're going to get up in this range here again, where we're pre-COVID, and we're going to start to see those closings start to happen and come back up. Because think about what's happened since, when did rates start really going up? Right in here, right? Look at what the closed sales did. They fell way off. So what's happened, and I think I remember the 30-year average, probably the highest number I saw that's reported on a national basis was about 7.25 on a mortgage. So that's 7.25 on a mortgage. Where are we at today? I saw CNBC on TV the other day that the 30-year fixed average was 5.99. So starting with a 5 is way better than starting with a 7. So what has happened since we were at 7.25? 2 things have happened. Well, 3 things, let's say. So the 3 things that happened: rates have come down, which makes housing more affordable to buy. 2, prices have come down in some areas, in a lot of areas, and the builders have reduced their prices. What is that doing? It's making housing more affordable. And the 3rd thing is, now we got the calendar that flipped. The calendar flipped, and now we're heading towards spring, which is the seasonality. Look at back at, let's go back to a non-COVID year. So here's 2019, right? We closed 954 in January of 2019. We closed 1,934 in June. We closed 894, which is very similar to the 954. Where do you think we're going to end up? I think we could peak, I think we could peak out where we were pre-COVID in that 2000 range. But look at how quick it comes up, right? Look at how quick the market returns for the spring season. So we're in the midst of that contract writing period right now. So we have hit the bottom. Now we got to return to hopefully what looks like 2018, 2019 numbers. Don't expect this or this, but we will return to this level here. And as your sales go up and your inventory goes down, what's your months of supply going to do?
Go down.
It's going to go down. And this is not like it's not like it's going to jump up and down, up and down, up and down. It's generally a seasonality trend. And if we go back far enough, you can see a little seasonality, right? You can see a little bit of it, not as prominent as some of the other ones, but I don't think all of a sudden we're going to go up. So we're still headed down. We could get down to, maybe 1.2 months of inventory, which is still very much a seller's market. Now, the buyers gain some leverage because of rates and because of, maybe the builders overbuilt a few things. So they've kind of cleared up some of that inventory. But the closed sales will rebound, and they should rebound. Maybe the peak months we're getting close to 2,000 new listings. And the other thing I wanted to point out is, typically, if we go back in time, your low month is roughly half your high month. So look at 2017, 1,000, 2,000, 2016, 972, 1941. So expect us, but I mean, you can see the dramatic drop off, but expect us at least to rebound to, hopefully up towards that 2000 range and start looking more like these years did in here. New listings. So this is interesting. So 14 point, so January was 1472. Last January was 1727. So we listed 15% less properties. Why is that? That's the lack of seller motivation. Really low interest rates that they're locked in at. They bought it for a low price. They're paying low tax on their assessment. So all that combined is the sellers feel very comfortable in their house with their payment, and they look at moving, and it gives them a sticker shock because of higher prices and higher interest rates, and then they're resetting their taxes. And so this is our challenge right now, is that we're not listing enough properties, and that's why you're seeing the inventory drop. The combination of buyers writing contracts and sellers not listing, that's why this is happening here. So, we definitely, I mean, look how low we were in December, 1108. If I go back in time, I think the last time it was that low was 2013. So nine years previous was the lowest listing month, from December.
Anton, excuse me, when we're
Yeah.
talking about entire MLS,
Yes.
I notice every day on like the hot sheet and stuff like that, a good 10 or so of those listings that we're seeing are in Somerton or Irmo. So when we're talking about entire MLS, this is not the traditional numbers that we looked at before we expanded our MLS, right?
You're absolutely right, Karen. When we go back in time, if we look at the homes for sale back here, nobody had any listings. There were very few listings outside of the Charleston metro area, like the Tri-County area. There was not many, but now that everything is expanding, so we have way less listings in a much bigger geography. And there's some crossovers. I mean, I'm sure you go to some of these listings and they're probably appearing in Columbia MLS and the Charleston MLS, or in Myrtle Beach and ours. So, the expanse of the MLS certainly has changed over the past 15 years as well. So that's a great point, Karen. This is a very low number. I can't underemphasize that, is that what are we doing right now? I'm seeing a lot of agents. What are we doing? We're looking for houses to sell to our buyers because they don't see the right one on the market. So we're back into maybe not this extreme mode where we were a year ago, but we're back into this mode of searching for properties to sell for our buyers. And what's telling me that this is about to turn up? I don't see it. Like, I don't see why this would all of a sudden go back up again. Now, traditionally, you do start to list more properties in the spring and summer. So if you look at, let's go to the new listing. So one thing I wanted to point out in here, if we go back in time, so typically what you'll see is that spring market. Oops, here's new listings. So look at what's the highest month. March and May. What's this one? March. What's this one? March. What's this one? March. What do you see as the pattern? March is the highest listing month as far as the number of listings. What month is it? It's pretty darn close to March, right? So we're about to jump through this high listing period. And then what does it do the rest of the year? It kind of drifts off in the summer, and then it falls off in the fourth quarter. It's going to look the same thing this year, right? It's going to jump and then we'll fall off. The challenge is we're starting from such a low base that do we get to 2,200 listings in a month? Maybe. I mean, do we get up here? I mean, maybe so, but that's still below where we've been historically, unless you go back almost a decade. So it's a challenge to get these listings because the sellers are just not financially motivated to make that move. They don't want to leave their interest rate as much as their house. So that's our challenges as agents are transaction count. It's not necessarily, I don't believe it's going to be the prices. I think it's transaction count. Look at the pending sales. So in December, we had 1,115 pending. And in January, we jumped to 1,485, right? But that's not atypical. Look what happens most years when you hit a low in December and then you jump, right? So that's what we're seeing. Are we going to jump up to 2,300 homes pending? Probably not. Are we going to go to 2,000? Probably so. I could see that. So, we are going to jump up and probably look like these. So the sales are coming in, which means our closed sales are going to jump, right? At some point, these are going to start to close and everything will start to balance back out again, but at a very low level for inventory. Dollar volume, I mean, we're off 30% on dollar volume, but you can see that cliff from June, we closed almost 1.2 billion to 480 million. Now, yes, you always have that seasonality drop off, but this was a massive seasonality drop off, right? So, everybody who's like, all right, I didn't have a great fourth quarter. Well, you're not the only ones, right? It's like, this is what happened to the market. And that's a very significant drop off, but what's going to happen? It's going to return up, right? So it doesn't matter what year it is, it's going to go higher. Now, are we going to close 1.2 billion in a month? I'd be shocked. I don't think we can close enough homes at a high enough price to do that, but we will return to, maybe 800 million to 900 million. I think we're going to get back up in this range here, but we're not going to hit, 1.2 billion. Shows to pending. So in January, it went from, it's jumping back up to 11. So this is how, this is, if you have a listing, you go through 11 showings before you get on a median basis, you go through 11 showings before you get a contract. So again, if you've got a listing, and I mean, Scott and I were kind of chatting before everybody got on here, but I had one that we went through 38 showings to contract. I had another one that I'm at 25 on, another one I'm at 27 on. So this number seems to me to be jumping even higher a little bit. Very limited sample size, but it seems like there's a lot of traffic out there, but buyers are being picky, right? And they feel like they have some leverage, and they're being picky on their selections and taking their time. The average showings to pending is 16 shows per listing. So, we were at 11 showings a year ago per listing per month, and now we're at 6.9, but we were at 4.4 in December, right? So that's a very significant drop off from here to here. But look at where we are relative to historic. What does January look like compared to pre-COVID? It's higher than any of these, right? I don't know how far back showing time goes. I guess 2012. So if you forget this window of time right here, and you look at January, which is, right, that's not necessarily like a peak seasonal month. If you look at January, we're higher than any month prior. So that's a sign to me that we still have a very healthy market with buyers out there, is because we are higher than anything in the past with a lot less for sale. So, all in all, go back. So it's just things to keep in mind from, where we've been to where we're going. And you got to separate those conversations as far as the sellers have different concerns than the buyers right now. And the buyers are worried about, maybe they've read some articles that say prices are going to come down. But if they need a relative reference point, it's, would you rather buy a house when there's 12,000 houses for sale? Or as a buyer, right? Do you think the market is going to be stable at 2,500 homes for sale or 12,000 houses for sale? I feel much stronger that the buyers buying today are not putting themselves at risk based off that low inventory, right? I mean, this was where prices went down, right? So reflect. So here's the peak month was August of 2007. Now let's go look at prices. And if we can go back in here. So right in here, and it's such a weird scale with all this price growth. But in 2007, we're at 215. Well, we went down to, I think the low is right here, 165. But that reflects the homes for sale, right? Look at how many houses we have available And it took this length of time for the prices to stop declining and start increasing. So long term, what do you think prices are going to do here? Long term, they're going to go up, right? So I'd rather be a buyer buying a house when there's not much for sale and it doesn't look like, does it look like this, that we're going up? Not at all, right? You know, we had a little peak and valley here, another peak, but we are going opposite. You know, the biggest thing I can't stress is that January should be a higher listing month. Our inventory should be going up in January and we're going down. So if we go down in February again on inventory and March, you know, and March is typically your big listing month. So I can't see where we're going to go down. But is it going to jump? I don't think so, because I think the buyers are overriding the listings coming on the market because of prices coming down and the rates coming down. They're perceiving it as more affordable. And I don't know if anybody read this, I wish I had the article with me, but Charleston was number 2 in the nation on rental price increase from December of 2021 to December of 2022. So the rental prices went up 25.3% as a median in Charleston in 1 year, right? So it is, you're either a tenant or a homeowner, right? You're one or the other. And if the rent rates went up 25.3%, what's looking better to you now with lower prices and lower rates? It's looking, it looks like buying might be a viable option with as high as the rents are. So, you know, and I know most of us are here to do sales, but watch the rental market, because that's going to tell you, you know, everything you need to know about the sales market, because it's an option and it's a payment option, right? Most people are going to be buying off of payments. So if they perceive the rental payments to be extremely high, and as rates come down and prices adjust and it becomes more affordable, they're considering buying as an option. And you know, we're back into that. I think we're going to return here the next couple of years to a normal seasonality trend. You know, we're still kind of going through this, you know, phase of adjustment from COVID of supply and demand and remote work and everything else happening, that we're still trying to find that normal season. And I think that's why we're seeing this decline in January on inventory instead of an increase. But you know, what are some of the experienced agents on this call? What's your January read on the market? And anybody can unmute themselves and share if they want. Scott, we were chatting earlier. Are you unmuted?
I'm unmuted. Yeah. What was the question?
What's your January perception on the market? So just, you know, we flip the calendar. What are you seeing January? What does it look like to you?
I believe that the inventory keeps dropping. You know, the inventory is dropping, but I've still got some that are sitting, you know, and some getting showings, some aren't getting showings. I'm like according to the stats, you know, even when it's the only house in the whole neighborhood, it's priced below the last few sales and still not getting showings. Like there's some things like that are weird. But then we've had a few bidding wars too. We've had, those aren't over with. I've had a few that even surprised me. I didn't think they get a bidding war, and they had a bunch of offers.
Yep. And I think you're seeing pockets of different, exactly what you said, you're seeing pockets of different market. If you're in a new construction neighborhood and you have a lot of new construction competition, it might be hard for that seller to unload. And I'll just give you an example, and totally different market, but think about the automotive market, right? What's happening in the automotive market? What did Tesla do in January? They dropped their prices 20% on some models, right? And then what else happened in January? In the automotive market, the federal credit of $7,500 came back for Tesla and Ford and GM and some of these other ones that had run out. So all of a sudden you flip the calendar, and January 1st, those vehicles are a lot less expensive and there's a credit. So what's happening to their market? All of a sudden, the used car prices are falling, right? Because why would you buy a 1-year-old Tesla when you can buy a new one for cheaper and get a tax credit? You're not going to. So all of a sudden, all these, you know, the supply and demand has changed from a standpoint. Now the demand's higher because the price is lower and they're still having supply chain issues. So it's the same thing with new construction. I mean, Scott, you were telling me about how much D.R. Horton dropped that house, right? Isn't that very comparable to what Tesla did?
Yeah.
Right. And the $7,500 tax credit for Tesla, what's the equivalent in real estate? The 2-1 buy down, right? Right. So it's mirroring, the automotive market is mirroring what's happening, but those used car prices have come down. Right. We've increased the supply, we've incentivized to buy a new vehicle. So it's becoming more challenging for that used car market. And it's very similar to what's happening in our market, is that, you know, those new builders, if they've really dropped their prices and added incentives of buy downs as a resale, you know, buyer, or as a resale seller, you have to be very careful not to overprice your house. And again, I'm in the same boat, is that some of my listings, I would think, man, I'm shocked it hasn't sold by now by as much traffic has been going through there. The positive side is the number of showings. If I were to go back to 2019 and you said in January and December, you had as many showings as I've had, I'm like, what's going on with the market? There are so many buyers out there. So I still feel like we didn't go from the spring of 2022 having as many buyers as we had and just flip the light switch. They didn't just all disappear. They're still there, and now they're coming out of the woodwork basically because of the lower prices and lower rates. So I think that's kind of the heading into the spring market. That's what we're going to feel, is that these buyers are returning to the market. And we also have a huge amount of local people who own a house that want to sell their house and move, but are hesitant to put their house up for sale because they don't want to end up homeless, not knowing where they're going. So, you know, you have to find alternatives for those sellers to motivate them to list their house and buy something else. And it might be going back to bridge loans. It might be, you know, doing your best to put a contingent upon sale contract in place, even if you're not on the market. You know, there are sellers out there, but a lot of the local ones, they don't want to list because they don't know where they're going. And again, with the lower inventory, you know, there's no guarantee they don't make themselves homeless. So that's what they're concerned about, is that they want to know there's viable options when they sell their house to be able to purchase something that is at a higher rate, right? And probably a higher price than they pay a couple years ago. So we definitely have some different dynamics now, because the buyer motivation is coming back because of the lower prices and rates, but the seller motivation is still very challenging because their rate is still way lower than the current rate. And you know, we talked about this before, but their tax base is still way lower than the current tax base. So there's a lot of financial disincentives to sell as a current homeowner that we have to help them through to, you know, assure them that they're going to get the right house, and they're just nervous to list without knowing where they're going.
You know what's really hard? Because back when, you know, you had some buyers that kept telling you, remember, oh, it's going to crash, the price is going to come down. And so I'm going to wait. And it's very difficult to say to them now, yeah, okay, prices are coming down. But what happened that I told you was going to happen? Interest rates went up from 3 to whatever. So, you know, it's like, I want to say, told you so.
Right. Well, and again,
I now, if they'd have bought it back then, even at the higher price, they'd still be better off.
Yep. So, and just for perspective is, so here's our peak that we had on price. So it was May of 2022, right? 425. So we're at 385. So that's a I think it's roughly a 9.3% price reduction from here to here. But seasonally, and I know maybe not everybody was on the call the last time, but the Charleston market goes up 10% from the low of the season to the high of the season, meaning kind of winter to spring, summer market. It goes up 10%, and then it falls off 5% the rest of the year. So your net, and again, this is going back in time to 2000, you know, the normal years, if you want to call them that. It goes up 10% and then down 5%. So your net increase is that 5%. So if we're saying we went down 9.2% or 9.3% from here to here, that's telling me that probably 5% of that was the seasonality and 4% to 5% was the market. So do I believe prices came down? Yeah, they did, right? I mean, look at all the price reductions. They did come down. And you can see that in this chart too. The prices did come down, but is 5% enough to call that a crash? It's kind of
Yeah.
more of a,
And
you know,
the thing of it is they just want to be, people want to be right. So when they say, you know, oh, prices are going to come down, prices are going to come down, and then they have the media agreeing with them,
Yep.
you know, they just want to be right.
And that's why I'm so cautious that I know what's going to happen in June and July when the May numbers come out and the June numbers come out. I just don't see how we're going to be above it. And I think that's on a nationwide basis too. So you have to be prepared to say, well, you know, why does the media say that we're down 7% or 8%? You know, that's, you know, we're still positive, but we're going to flip negative at some point. And it's just trying to be proactive to have that conversation. And essentially, I think if we fast forward, I think essentially what we're going to see is these 2 months were way above where they should have been. And the rest would have been a, you know, kind of, we're adjusting back to where the line should have been. And these 2 months are very tough comparisons.
Anton, I'm curious, when you've got houses that are showing, you know, you said 20 times like that. Now, NAR has always said you have 10 showings and you don't have an offer, it's time to look at your price.
Yep. And that's what our market is showing us. We're at 10 or 11. Now, part of the reason why, and I have reduced, you know, one I got under contract, reduced the price twice. One, I reduced the price twice, and hopefully I'm getting an offer today. Part of the reason why I was maybe a little slower to start dropping the price is because we went through Thanksgiving, Christmas, New Year, right?
Mm-hmm.
We were in the slow
Yeah.
season, but still getting a lot of traffic. So I felt like, okay, well, when the calendar flips, now you're going to have more committed buyers who are making decisions, right? It's so hard to, you know, once you got the holidays in the way, it's hard. You have to be a really motivated buyer to make decisions. And I felt like, well, we're getting enough traffic, we're going to find the motivated. So I was probably a little slower in making that price change, and they didn't necessarily have to sell that day. But we're getting to that point where, okay, now we're back into the normal traffic pattern of showings with people making decisions. So now, if you start going through a lot of showings in these months ahead and not selling, then you need to make an adjustment, right? So I kind of put a little pause on pushing too hard because of the holidays. And look at what the rates, you know, the rates have come down. So that's motivating the buyers. And if the national average is 5.99, your local lenders can find you a better deal than that. You know, obviously credit dependent and down payment dependent, but if the national average is 5.99, you should be able to find a lower rate than that. So, and any more questions or comments?
I think along those lines, we're seeing like a big gap in what buyers think they can all of a sudden lowball these low, you know, and the sellers are still holding on. We just had one, they wouldn't even move $1,000. It was a $650,000. You know, we offered them like full price with 10 grand in closing credit. They said, nope. We're like, all right, how about 5 grand? Nope. How about, can we get 1 grand in closing credit? Like, nope, full price or leave. I'm like, what? Well,
and I had one here recently with the buyer that was basically, we made an offer. They didn't even like respond to us. And I mean, I thought the offer was worthy of countering. And then, you know, we let a week go by and nothing was happening. We made a higher offer, still nothing. And you know what? They got it under contract at full price. Not with me. But like, so your buyers are going to have to learn sometimes the hard way. That, you know, the sellers, you can't have, I'm sorry, but you can't have 1.6 months of inventory and think it's a buyer's market. There's just no way.
They hear media, I guess, thinking that the market's crashing. We can lowball them now. Like, no, you can't.
But watch, the market is already, sorry, the media is already backtracking on some of their comments. If you read enough like articles, they're already starting to backtrack. And this rebound in pending sales that happened in January, that's going to start to pique the interest of the media. Now they're going to start to backtrack off of this crash, because you can't have 1.6 months of inventory and have, you know, a bubble. It's just, it's not possible. And again, this is the biggest number. We were at 17 months of inventory. So think about that for a second. In the recession, if you had 17 homes for sale in a neighborhood, only one of those 17 would sell that month. One of them. Right? We have 1.6 months. Right? It's just, it's not that we are not in this world. We're nowhere close to this.
Anton,
So, yes.
just before you end, can you speak to the difference in the new construction versus?
So
previous-
here's
because
the new
I think
construction.
it continues to make a big difference in our numbers, and I think for people working closer in, they need to be focused on the previously owned in certain situations more than new.
So I just clicked on, I flipped over to new construction on months of supply. So new construction months of supply is 2.6 months. Now they had gotten up to 3.5 months. And Scott, that's why Moore's Landing dropped as much as they did. But so they're down to 2.6 months. So this is the builders working through their inventory, 3.5, 3.4, 3.0, 2.6. That's working their inventory down pretty quickly. Now, if we flip to, so just remember 2.6, if we flip to previously owned, what's it at? 1.4, right? So 1.4 months of inventory as a resale. So you can see, and I mean, look in the recession, where were we? 20 months of inventory, right? And the resale inventory back then was so high on months of inventory because those builders had to unload their product, and the D.R. Hortons of the world and Lennars of the world with these deep pockets, they don't care. It's not, you know, it's not that individual's money making those price cuts. It's a business decision. So we are only sitting at 1.4 months of inventory on previously owned homes, which is phenomenally low. And everybody and again, it's going to take, the buyers need to realize when they start seeing these houses start to disappear, and some sellers, if they price right, they can hold a full price and they're going to get it. You know, somebody's going to pay it. And it's finding, you know, and again, if you look in different places of the country, we're probably fairly fortunate here in Charleston. I mean, I've heard Austin is having a little bit harder time because they had more of a run up. You know, some places out west, Vegas, you know, there's some places that are going through a little bit more heartache than we were, or we did. But I think if you look at it, we can't be this low and think that we have a problem. And yeah, it was a tough second half of last year. But when you look at what's happening right now, there's a lot of buyers out there. And it's just that we got to work on that you know, you and your business have to work on that transaction count, because it's still hard to motivate those sellers. I mean, you can't have a transaction if you don't have a seller. Right. And you know, we are still very low on inventory. You know, this is showing the lack of motivation of sellers right here. That's a very low number. And think about it, if we're selling 1,500 homes a month and we have 6,000 for sale, that's 4 months of inventory. That's a neutral market in my mind. And that's where we lived, you know, that's where we lived all these years, right? If we go to months of supply, look at where we're at. We were bouncing between, you know, we were bouncing around 4, right? That's as a normal market as you can get. And we're at 1.6. So to get back to 4, what do we need? We need more sellers or less buyers. Well, doesn't feel like at the moment there's less buyers, and we are actually working on trying to get more sellers. So we're going farther away from a neutral market. And it'll be interesting to see kind of once we get into February or March, when you have a lot of listings hitting the market, are the buyers still overwriting that inventory hitting the market? And I don't have the answer to that, but it doesn't look like we're going to based off of this trend. You know, maybe one more month of data will show me, is it starting to level out, or where do we end up? But you can see the lows kind of happen, you know, towards the peak. So towards the end of the year, and we're going down from here. So, you know, it's very interesting times of how quick it switched June of last year when the rates jumped, and maybe kind of watching it switch back again so soon after that, because of the lower rates and lower prices and still high demand and lack of motivation to sellers. That's where the market is right now. So, well, I think that's everything I had for today. I hope everybody got something out of this, and, you know, just think of these numbers and scripts for your clients and how to address their concerns, and just watch the media in May and June, because I think the numbers are going to flip negative. So we just have to be ready for that. So, well, everybody have hopefully what looks like the rain has stopped, hopefully. Have a dry weekend and go sell a couple houses while you're at it. So, and we'll do this again the first Friday of next month as well. So,
Thanks, Anton.
Thank you.
Thank you, dear.
all right, have a good day.
Thank you.
Bye.